All right, test 1 2, test 1 2. Test 1 2. Arthur, can you hear me?
Oh yeah, I hear you.
Great. All right, so it's running somewhere else. Is that on your end or my end?
I guess it might be my end, huh? Try now.
I think we're good. All right. Let me just find where I put the controls. So that's okay, that's that. Yeah, I think it was on both ends, but we're good. All right. So far it's me and you. I invited Frank and I meant to put it into the Discord as well. Let me go just throw it into the Discord in case anybody wants to come in and hang out. All right. So Arthur, how are you, sir?
Pretty good. Had a good day. Set up the little hot tub again. Well, it's a hot tub, but we're gonna just make it not hot for my daughter. So yeah, did some stuff around the house today. Enjoyed it.
Nice.
What about you?
Good. Relaxing, a nice relaxing day, I guess, right? Good.
Yeah. So what's on the agenda tonight?
Yep. Just talk about the market, talk about the charts, what happened on Friday. Let's look at some of these Mag 7 stocks. Let's look at some of the memes, not necessarily meme stocks, but the cult stocks, the ones that everyone loves to follow and buy and support and see where the damage, what kind of damage was done technically to them, and where we go from here. Look at some technicals and maybe talk a little bit about what also caused the action on Friday. It was a combination of things, which we'll get into, but the market looks for reasons. I think, you and I were doing a coaching session, and I think I said, look, right now there's nothing to worry about. Where is it going to come from, right? Well, we found out Friday, which we'll get into. I'm just waiting for some more people to show up. I'm not sure
Yeah.
how many will attend. So far, it's I think me and you. I don't see anyone actually comments. Okay. And I'll tell you, this stream, what's it called? StreamYard really drains your system. I can't believe how slow everything is when it's running.
Really?
But yeah, everything is slow, but that's all right. As long as it's working, it's okay. Comments. All right, here we go. Now these. No, that would be, yeah, that's comments. Yep. And private chats down below. Okay, good. All right. Yeah, so, Friday was unique. Friday was August 1st, which I think everyone's talking about it. August 1st is known to be, August and September are known to be seasonally challenging months for the market, with October, November, December much better, year-end rally, Christmas, Santa Claus rally, they call it. So that's not technical, that's seasonal. So seasonal, it was August 1st. And then with some of the headline news that came out, first of all, we had the jobs report come out, which was not as good as expected. And not only that, but they actually revised previous jobs reports down. So what looked like an economy that was maybe firing on 8 cylinders is now showing to be maybe running on 4 to 6. And, the market didn't like that too much. So there was that. Plus, there's some new headlines now talking with, we're getting a little on the hard line with Russia. Russia's foreign minister, or whatever his title is, came out with some comments. And then, Trump's not one to take innuendo or like subtle, talking out of the side of your mouth by anybody, especially like Russia, lightly. So he sent a submarine, I believe, like a nuclear submarine, to the area to just hang out. So, when you talk about potential conflict or just, agitated relations with Russia, the negative jobs report and then the negative revised jobs report, and you add in it's August 1st, the market's looking for reasons. We talk about it. The market is looking for the next reason, either to go up or go down. And the first reason that showed up was to go down. So there we go. We fell pretty hard on not just the indices. The SPY, the Q, the IWM. Bitcoin was down, and every major stock, especially the mag stocks, were not just taken down; they were beaten down. And and especially tech. Tech really took it on the chin, but that makes sense because tech is really what's been carrying the market. I mean, I was looking at some of these moves that we've had in these names before coming on live, and here we go. It's going to act slow again on me. Here we go. All kind of shit's going to go crazy now. Let me back this up. Arthur, can you confirm you can see my screen okay, right? Oh, wait, you can't.
No, I can't. Now I can.
Okay. So this is Microsoft, and just off the top of your head, from this gap up day here, which was like end of April, May, it wasn't April, it wasn't in the midst of the fall, the major April sell-off, but it was this gap up here on, was it earnings? Let me see. It wasn't even earnings. It was this day here on some kind of news. I don't know what it was. It doesn't tell me what this news was, but it was a huge gap. From here, from this gap up, not even from the lows of April, from this gap until the high, what percentage move do you think that is? I mean, I'm not just asking. What do you think it might be?
Close to 40 to 50%.
Yeah, good guess. I think it's 30%. Let's see, or more.
Yeah, I guess you're probably at the like 30, 35, maybe. Now looking at it.
I'm just waiting for my mouse to cooperate here. Jesus Christmas. Yeah, 30%, 30, almost 31%, 130 points, 31%. I mean, come on, that's within May, June, July, 3 months, 10% a month. That's not normal. That's a bubble. And I hate to say it, but there are a lot of these stocks are sitting within bubbles, creating bubbles, whatever you want to call it. Microsoft is one of them. Meta is another one. So it's not terrible that we have some selling. We need a little bit of a healthy pullback, but these moves have been just like ridiculous. So, but on top of, it wasn't just, if we just had a little bit of selling coming in because it was a natural pullback, that would have been one thing. But the selling came in on, 3 different things, which we just got into. And if you're late coming to the event, Arthur and I were talking. Arthur, by the way, this is Uzi. I'm speaking, and I have with me Arthur. He's one of the members of my Discord. He's a technician. He's a great trader, and he has great insights into technicals and stuff. But we were talking before everyone else may have shown up, and we were talking about what may have caused or exacerbated some of the selling on Friday, which was not just normal pullback selling. It was first of all, it was a gap down, right? So that's not just the beginning of some selling, maybe some profit taking. It was a gap down, and it was a brutal gap down for a lot of stocks. it came off the heels of a couple of things. Number one, seasonality. August 1st, August and September are known to be less rewarding as far as stocks are concerned in the months of August and September. And then also we had the jobs report come out, which not only missed on the number they were looking for the month, but they revised the couple of previous ones down. So the market that was looking like it was firing on some 8 cylinders or so is not. It's maybe firing on like 6 or 4, whatever. It's just not. It's not as hot as it was. So the big money is starting to wonder now, is this economy starting to slow down a little bit? What's going to happen? And these words weren't talked about, but the words that probably come to mind are maybe recession or just slow growth for the end of the year. So the market's trying to figure that out, and then the revisions lower from previous quarters are like, hey, wait, where are we really here? It's almost like your kid tells you he's doing all his homework, and then you find out he hasn't done homework in the last 3 weeks or something. Something's wrong. We got to figure out what's wrong. So that was that, and then we had Russia's talking some stuff out of the side of their mouth over in their part of the world, and Trump responded by sending a nuclear sub over to that area of the world to just kind of hang out and show its muscle. So we got a lot of things going on right now, and the market is not going to take any one of those great, and then you combine all three, and you get a little aggressive selling. I'm dealing with a slow computer, even though it's a decent computer. I'm dealing with this screen sharing program, which is good, StreamYard. It just drains a lot of resources, and I'm already running a lot of resources. So just bear with me if things are a little bit slow to load. I'm used to a lot quicker, so this is killing me. AAPL, wrong symbol. If you guys that are showing up and watching, if you wouldn't mind, hey, just type in hello or whatever in the comments box. That'd be great. We can maybe just say hey, and say what's going on. Waiting for Apple to load. Oh my God, jeez. And there's nothing I can do to even speed this up. All right, so this is Apple. Now Apple has been in a nice triangle. It's actually a symmetrical triangle, which I don't particularly love. Arthur knows that. I don't love these triangles, but geez. What we had was the breakout to the downside on earnings, and this obviously does not look good for Apple. Now, Apple obviously is a tech stock, and so there's going to be some fallout with with going forward. Now, if it's going to continue down, and it looks like it's going to. It was down on some decent volume. Okay, we had the MACD increase to the downside. The histogram you can see down below is increasing. RSI is falling like a rock, and we're breaking a pattern that it had been in for, I don't know, since April. It took from April to August 1st to carve out a beautiful symmetrical triangle, and these can break either way. Symmetrical triangles, 50-50, up or down, depending on what the catalyst is. Typically, the move leading up to it is the main determinant, which is a down. This was a down move, so that does have maybe a 1%. I'm not. Don't quote me on 1%, but it's got a little bit of a higher percentage to break to the downside, but there's no guarantee. But in this case, it did, and it did so on earnings, and it did so with. And they had good numbers. This isn't like Apple missed their earnings. They had good numbers. So to move down out of a beautiful triangle, which took a while to build, is severely bearish. This does not look good. Now, I'm not saying it's going to go to zero, right? But it doesn't look good. And the next line in the sand would probably be down toward this little pivot down over here. And that looks like to be around the $200 price range. So that probably is going to be the next level to test. For Apple. But let's start with the SPY. I don't know why I'm getting on with this with the mags. Let's start with the SPY.
Yeah, I agree to
Anything
all that.
You want to add? What's that?
I agree to all that.
Yeah. I mean, it makes sense. Look, you can never. Sometimes you can't make sense of the market, but sometimes you can. It can be simple, and sometimes there's no telling what's going on with the market's mind. But so I was fiddling around with the charts, trying to get things going earlier. So here's the spiders, and for those that are not technical or whatever, just I'll explain what's going on. Basically, we have a channel here. We have price. The price was being held up by this support trend line, this diagonal here, and then it was being resisted by this diagonal trend line there. So we have what's called a channel, and it's parallel. So when you ever have parallel lines, you got a channel. Every time it bounced, it went up to this line, it came back down. Okay, so when it went up here, it came down. It tried to get up, couldn't get up there. It was very weak at this point, came back down to test the trend line again, actually created the trend line at that point. Came back up, confirmed that upper trend line, strong, too strong to touch it again, headed up, touched the trend line, tried to get through it on this day, couldn't, and then we have where we're at now with the SPY. So technically, right, even though I said a whole bunch of negative things, technically the SPY is still bullish and within the bullish channel that it's been in. So there, as far as that's concerned, no harm, no foul. Okay, and it got caught and supported by the horizontal support trend line right here. So actually, and look how isn't that amazing? It's amazing, right?
Yeah,
they line up. They line up, right? You can't make this stuff up. Now,
yep.
When you bring the Fibonacci in, depending on where now Fibonacci, guys, for whoever is out there watching who doesn't know what Fibonacci is, it's just a tool. Some people like it, some people don't. I like it. Arthur likes it. I taught it to Arthur, and Arthur fell in love with it. The thing of it is
it's the only way.
What's that?
It's the only way now.
Yeah. So Fibonacci is funny. I would recommend to Google it. It's too long of a definition and description to go into here, but Fibonacci exists in all areas of the world and in space, right? It's not something that came about for trading, but you can use it in trading and charting. But it shows up everywhere. It's the reason why your face looks the way it does, your hands look the way they do, seashells look the way they do, the sun, the moon, how everything spins. Just Google it. It's pretty interesting. And I like it for trading. Now, you can do what's nice about Fibonacci is that there's no exact science. It's however the user wants to use it for however they're trading. So I looked at it from few different levels, and depending on where we start from, and you really want to start in an area where there's been some type of support. But if we go to the most recent little area where we had support, okay, which is right there. Okay, we're going to find that when I zoom out a little bit, that we have confluence. And what that means is multiple things lining up. We've got confluence with the trend lines I just showed you. And I'm just waiting for this thing to respond here. We've got the trend line, this horizontal trend line we talked about. We have the diagonal trend line we talked about. And then looky, we have the 38.2 Fibonacci retracement level right there. Now, 38.2, for those that don't know, is an area that if price pulls back to and bounces from, you're in a super duper strong bull market for that issue, whether it's the spiders, Apple, Meta, whatever the stock is, whatever the symbol is, gold, oil, whatever it is. If you come back to the 38.2 and stick, you are in a strong bull market. Even if you come back to the 50, that's fine. But more so if you're at the 38, it indicates that a very strong area of support and buyers are showing up. So we've got three things showing that the market is still fine, okay? Even though we have a pretty nasty gap, and if you look down below, I have it highlighted already, on monster volume, okay? The biggest volume bar since the April lows. That means something. That does mean something. It means a lot. It's the biggest volume bar since the April lows. Yes, it was caught by support. So that's great. This is all good, okay? The question is where do we go from here? We'll find out next week. We have a little bit more of the coming earnings coming from some of the bigger names. I think AMD is coming this week, and a couple of other. I forget. I have to look at it. But there's some bigger names coming this week, and then it kind of slows down with big names. But AMD is the next big one everyone's waiting to see. H2 chips. How are those sales going?
You got Palantir, HIMS. You got all your retails.
Thank you. Yes, Palantir, HIMS. Thank you. Yeah, thank you. Those are big. Those are big because those are some of the cult stocks, definitely. But we had Hood come out and got that one out of the way. We had SoFi come and get that one out of the way, and of course, the Meta, the Microsoft, the Apple, the Netflix. NVIDIA is coming up, right? No, we have
Yeah, I
NVIDIA.
think. No,
Wait,
I
do we
think
have
it's in
NVIDIA?
a couple. I think Nvidia's later though. I don't know. I'm not sure on that actually. I thought Nvidia was a little later for some reason.
Yeah, let me see. Uh, this one tells me. Yeah, actually, NVIDIA is coming up. NVIDIA is coming up August 27th.
Yeah,
So that's coming up. Okay.
that's at the end of the month.
So we have NVIDIA and AMD to go. Yeah, that's
So
actually, we got some time. So the chips,
so the
so
market
all eyes
goes
are on
flat
AMD.
until Nvidia earnings. You heard me?
Hey, look, I'm hoping that the SPY catches a bid on Monday, Tuesday, bounces up
Mm.
here, does a little bit of dancing around. It's probably not going to hold the uptrend line. It's going to hold maybe the support trend line. If it does hold, I'm going to tell you what, I'd rather see it hold the horizontal. If it holds the horizontal support, okay, which by the way holds the higher. So like I don't know if you're in the, I'm not a veteran as far as the services. I'm a veteran trader, but I'm not a veteran from the services. But let's just say you got the sergeant, you got the lieutenant, you got blah, blah, blah. I don't know even what the highest one is, but let's say the lieutenant is the highest. I'm sorry, I should know this. If you guys are veterans, I should know. Whatever the highest one is, horizontal support is a high on a higher order than diagonal. So I want to see it hold horizontal support more than I want to necessarily see it hold diagonal. And the reason is pretty simple. For it to hold the diagonal support, right, it's going to be going in a pattern that, to be honest with you, is considered bearish. I'm waiting for my drawing tool. Arthur knows what these are because I taught him to him. But when you get a move like this, when you bounce around like this, okay, you come up, you come down around on this trend line. Okay, that pattern is called a bear flag. Okay, and typically those break down to the downside, especially if you're coming from this heavy down move. The next move is usually down. So I'd rather see it go sideways, okay, which would be, like I said, holding the higher order of support, okay, and just go sideways for a few days until it can get, garnish up some energy to try to move up a little bit again and go back.
Is that 620? Is that the 621 level?
What's that? The horizontal?
Oh, yeah, the horizontal support. Is that 621?
Let's see. It's about 620. Yeah. If I look to the right, okay. 619, 620. So called, yeah. Well, the 38.2 is 621. So yeah, you can see that, right? So yeah, call it 620 level, zone, anywhere around that area. Give or take, it's an expensive stock. So give or take 3 to 5 points. But yep, right around 620, 621, 619, anywhere around there. But that's what I'd like to see from the SPY. I mean, I don't want to see it. I'd rather not see it gap down. Even if it did come down to the 50 Fibonacci level, wouldn't be so terrible. That would line up with the 50-day moving average, pretty close. Actually, the 61.8 and the 50 is where the 50-day moving average lines up. So we've got, the potential for the SPY to really come down to that area, okay, and still be in an uptrend, but it would have to close back above because we've got this pivot right here on this down day, and we really don't want to see it break. And that, you can see that held it. So we really don't want to see it break below, because then what we might have is what's called a lower low. And if we get only a move up to this area here the whole week, we'd have now on a weekly a lower high and a lower low. And that would be the beginning of a short-term downtrend, which we don't want to see. So with the SPY, we do have some things that still look okay. I'd rather not have seen monster volume. Okay, a little bit of, maybe even the same volume as maybe the prior day, which was a bear engulfing. We kind of should have known that it was coming on Thursday. Thursday was a bear engulfing, ugly red candle on increasing volume. Okay, and the MACD was kind of firing a little bit to the downside. We could have, and we should have known, because August 1st, as we know, is seasonal. We should probably figured it could be a rough Friday, especially with the jobs report. But you hope for the best, and you wake up and find out that morning. let's go to the Qs for a minute. Now the Qs obviously are going to probably be a little uglier looking because this is heavily tech laden. The SPY has a lot of tech names too, but the Qs have a lot more. And as you can see, we're waiting for it to load. Okay, here we go. So very similarly, we have pretty big volume, not as exacerbated as the SPYs, but definitely a nice increased volume day. But the difference here, and you can see it, is that it's actually not the second highest since the April lows, because we do have a big volume day here, which probably equals it. This volume day here was 71 million, and this volume here was 69. So Friday's volume of 69 million was less than the volume on this day when it gapped down here. Actually, was that? No.
That had to be the talks when all about the chips being tariffed and everything.
Could be. It's May 21st.
Yeah, I think there was like some kind of talks that was after. Yeah. That's why Microsoft had got down. I think a lot of those had got down with something with tariffs and chips with China.
Yeah, I'm not sure, but yeah, I mean that was a big volume day, and then we did have a couple of other bigger ones along the way, and then until the last 2 days was increased volume. Now, let's map this one out together. Now, we're just looking up here. We did have also on the Qs. We had that bearish engulfing, which was an ugly indication of what could come, and it's one of those things, right? Do you do some hedging on Thursday into Friday, or do you say, you know what? Why? What are you going to do? Buy put? We could have bought puts. You could have bought puts, but that would have been that looking back, that could have been, it's a 50-50 play, right? Because who knows? The jobs report could have been fine, and it would have maybe outweighed anything Russia related or even seasonally related. If the jobs report was stellar, I doubt we'd be talking about the ugly day on Friday, because that would have been all the market needed to overcome, because the market's been overcoming a lot, right? And again, actually, that's another thing. I forgot one more thing. On August 1st, we had those tariffs kick in. The new tariffs kicked in that were being placed on all these other countries. So we had that also as a factor. Not that really should have been such a big to do, but for sure, it had somewhat of an influence, because again, it's yeah.
So I listened the other day. The thought process of August is a time where college tuition, private tuition is kind of always due, and market managers and hedge fund managers might go on vacations. So do you think there could be correlation with August always being a month where you're going to be taking profits, because these people, they're not necessarily having their money sitting in a bank account waiting to pay for college tuition or private education? So what are your thoughts on like the seasonality of like, hey, August, money's just going to get taken out. It's inevitable.
Could be. I mean, there's got to be a reason why August and September are traditionally uglier months.
Vacations, college tuitions, just anything. I feel like, I don't know, maybe it's not that much, but I mean, you had so much profit going up in the last months, and if you want to take a breather, let's pull some out and let the market cool off. I don't know.
I mean, maybe the reasons are kind of like, you probably could make a case for anything. I don't think, again, this is just my layman's thoughts, I don't think that there's enough people that are paying for college that would really roil the markets like this, right? This is roiling the markets. Maybe taking some profits, but I don't know. I don't see that being a major influence. It could be some of the reason why there's maybe more selling in this time period. But even if you go on a vacation, how much you're spending? Even if you're a big spender, 10 grand, 20 grand on a vacation, you're not selling. How much stock are you selling? I mean, if anything, it's just one of those things where the most of the summer is over. People are positioning big money is positioning, really. Not even people. It's not people like you and me, or even like our peers who have kids in college. It's bigger money. It's the kind of money that's moving markets is huge.
I mean, yeah, and I don't know. There's got to be. I don't know. I see the noise of the job report, the submarine in Russia, and I just feel like, yeah, that's a little bit going on. But I mean, there's a lot of profit that was made, and the frothiness was there, and I guess just it was time to take some off the table, right? And tariff season, with when this month being tariff season or tariff month, right?
Yeah, but here's the thing: seasonally, right? Seasonally, from the time that they've been watching seasonal things, you've got August and September being, let's say, the slower time frame. So what there is got to be something. If you want to chat GPT it, that'd be great. I mean, I'm curious what chat thinks about it. I don't know the answer, but I would have to think. It's bigger than just any one thing, or even people's personal stuff. It's got to do with big money moving. I mean, if it coincided with, let's say, the end of June, I could see it, because that's the end of the quarter and the end of half the year. The next one would be July, August, September.
Tax purposes. I mean, I don't know. Like, there's got to be something.
I don't know. Let's see. Let's see what Chat GPT says. Just for shits and giggles. Investor psychology. Many traders and institutional investors take So did you Google this? Did you chat GPT? They take vacations. Low trader sell in May and go away, but that's not even May. So May to October underperforms. November, April, mutual and hedge funds rebalancing. So institutions often rebalance or
harvest tax losses
in late Q3, especially if their fiscal year ends in September. That could be that could be a big part of it. And again, that's what I'm talking about. Bigger money, mutual funds, hedge funds. This rebalancing can trigger selling across sectors, earnings and economic concerns. Yeah, I can see that. Sometimes the summer earnings report, which is this one right here, is typically terrible for some industries and some some companies. Again, now chips are right now leading the way, but chips used to have seasonality where they went into like a winter, you call it like a Bitcoin winter, or the chip winter, or whatever you call it, like where it hibernates. The stock prices used to get beat up. But now that the chips are kind of used for almost everything, they don't really have that. Q3 earnings, spreads, geopolitical. Okay, so back in the day, talk about 9/11, Gulf War. Momentum weakens in August and September. Technicians talk about the breadth indicators, negative sentiment coming from self-reinforcing. Yeah, that's a big part of it too, I think. See, the market's funny, right? It's made up of traders who have emotions, and if everyone thinks it's going to be bad, people start to sell, and that can actually exacerbate some things. But whatever the reasons are, low volume, vacation selling, rebalancing, weaker earnings, historic precedents of crises and behavior. But
yeah, it's hard to say.
But the most important thing is we've got some selling. The Qs also held diagonal support. Okay, it didn't even make it down to the bigger level of horizontal support, which is positive for the Qs. But we have a gap. Now, whenever we have a gap, all 90+% of gaps do get filled. It's just a matter of time. The question is, will this be a quick gap on Monday filled? Could be. If that's the case, buyers are going to start to step back in and show support. And so in this case, the diagonal support might actually hold up, and we could just maybe go sideways before we get maybe the earnings from AMD, some type of other big earnings, where we can start to maybe test those all-time highs. But this move from the lows of April, and even if we discount April's lows, like we talked about Arthur and I one day, even if we just take that away, because that was kind of a tariff crash, if you want to call it, and then use the next higher low from here to here is huge as far as percentage. Let's just take a quick look and see from this area here up to the new highs, what that level is. And we're talking about 34%, 34% and 146 points on the Qs. I mean, that's just crazy. It's huge. 34% in 3 months, 10% a month, a little more than 12% a month, almost 12% a month. I mean, that's, if you have that in a year, that's a good year. So you've got that in a month 3 times in a row. It just makes sense for some healthy pulling back. Again, it wouldn't be the end of the world if we pulled back to the horizontal support and blew through diagonal support.
We just don't want to break that. We don't want to break that support.
Yeah, we don't want to break that horizontal support. If we do, then we have to start to pull in some lower Fibonacci levels, which
unfortunately with this market, I feel like everyone's just a panic of one button from panic selling away. If anything happens, I mean, you could have I feel like April 7th is still another possibility in the world we live in right now.
Well, what's interesting is horizontal support, major horizontal support, aligns perfectly. You can't make it up, Arthur, with the 50-day moving average right there.
Yeah.
So that would not be the end of the world if we pull back to horizontal support. Now let's just see where we're at right now, where we closed, from where we closed on Friday down to horizontal support, what that move is. And that move is approximately another, let's call it 2.5%. So another 12 points, 2.5%. Now we had, how much were we down on Friday percentage wise? I think it was about 1 point something percent on Friday.
I believe so.
Yeah, let me go over to this one seems to be moving faster. Trading View. So on Friday we were down, will it tell me? Yeah, we were down 1.97% on Trading View, on the Qs. Okay, so what we were down on Friday, more than that. So 1.97 to 2.3. So another point, almost another 0.5% down to get to where we'd say, okay, still in an uptrend at support and 50 days, at horizontal support and at 50-day moving average support. So that would be fine, but it's going to be painful, right? Because Friday was pretty painful to some portfolios, to some stocks. So to get to there, a little more pain. And that would only be 2.3 and 1.97. Let's call it 2.3 and 2 would be 4.3. So less than 5% move. And that's a lot of pain. It's a lot of pain.
That's a good pullback though, huh?
That would be a 5% pullback, right? So, or a little bit less than 5%, but that would just be what we used to get on the regular, 5 to 10%. Okay, that's what we used to get. We don't get them anymore. We're in just a raging bull market. So, hey, that would be healthy and that would be constructive. And if we did bounce from there and we started to carve out maybe a head and shoulders bottom, maybe a big cup and handle, it might take 3 to 4 months for that to materialize, but that would be healthy. The longer it took, the healthier it would be. Weed out some of the weak hands, bring in some new money that's been waiting to get in. And so that would be actually a welcome thing. But for portfolios and people that are in some of these stocks that are high beta and holding options that are high delta, they're going to be affected. So that would be the unfortunate thing, but it would be healthy for the market for sure. Now let's just take a look at the little guy IWM, which is the Russell 2000. That's 2,000 stocks, medium cap. It does hold some decent sized names that I'm sure everyone has traded or may even have in their portfolio, but not the big names. Just waiting for it to load. Okay, so yeah, I was doing some work on this. Let me just remove everything quick. This has been suffering more than anything. The IWM has been, and it kind of makes sense because it's kind of interest rate sensitive. So it does better when interest rates are lower, and it would do great if the Fed would lower interest rates. But the Fed doesn't want to lower interest rates. They feel that we don't need that right now. So because of that, I mean, they have really, even though they have bounced, they've kind of taken it on the chin and not been able to get really as much movement as the Qs and the SPYs. I mean, you can see it never even made a new high. It's been just fighting to get back to a pivot over here. I'm trying to pull it up for you. Like it's just trying to overcome this pivot zone here, this shoulder, if you want to call it, from the shoulder, head and shoulders top. It can't even get above it. So it's weak. It's the weakest. Okay, but it did hold the moving average here. This would be here's my 50-day 200. Yeah, it held the 50-day. Actually, you have the 50-day and the 200-day lining up with each other right here. So it's at do or die level. Let me just zoom out a little bit, show that to you guys.
The 50 and the 200 are on top of each other?
Yeah, I'm trying to zoom out. Yeah, they're right on top of each other.
This is a do or die for it.
I look to you all, but here's yellow, and here's the brown, and we almost have what's called a golden cross. The 50 coming up through the 200. So, I mean, bullish as all hell if this thing can break above on this upcoming week, close the gap, and then try to gather some steam to head back up higher. So while the IWM has been beaten down, it's actually technically at a do or die level, which is bullish looking right now. Okay, the move is over. The down move, I shouldn't say that. The down move has been brutal, and it could be over. And it's finding support in a zone where we might have a golden cross. And that's when you have the 50-day moving average cross above the 200-day moving average. And on Friday, this also had some super duper high volume, but barely higher than this candle here, which was also in June. Different than the May one from the Qs, but still a high volume day. I don't know what that was from. But if it can hold and cross above, we can maybe get that golden cross and stay in an uptrend. Because as of now, we've made a lower low. And you can see that. Let me just pull up one of my drawing tools. This candle right here with this wick, okay, Friday took it out completely and couldn't get above it. As you can see, the low of this day here is higher than this complete candle on Friday. So that's just indicative of how powerful this horizontal support was, and it could now become resistance. So it's all eyes are going to be on the IWM as far as for the small to medium size stocks on this upcoming week. I'm trying to get one of my drawing tools up here.
I wonder, they have a lot of earnings getting reported from this ETF this week.
I want to pull it up on your end to see what's coming up for next week as far as small caps. You can go to Earnings Whisper or something like that, but I don't know off the top of my head which names are in the small cap arena that are coming up. Probably more. You know what? The names that have been reporting have mainly been, SPY, the QQQ, stocks that are in the Qs and stocks that are in the SPY. After this week, which is again some of the bigger names, that's when we're going to probably start getting into the IWM stocks, the Russell 2000 stocks. But this zone is critical that it gets back above in the upcoming week or two, which would actually propel the 50-day, up through the 200. Now, on all three of these indices we just looked at, the RSI is not oversold. I mean, even though the IWM has been beaten down, it's not even oversold yet. It's RSI is about 41 right now, which is, getting there, but it's not even oversold yet. So it could go lower before it gets in the oversold area, but we don't want to see it go any lower because it's really at a do or die spot to hold. Yeah. Any questions from the crowd? Anyone? So there's about, I don't know, it's showing about maybe 5 of you are watching, or maybe, I don't know, 3 to 5. Any comments or any questions you guys would like to ask? Feel free to say hello in the comments. I'm wondering if they can't speak in the comments. I think I had that problem last time. People couldn't speak.
Now, are you on YouTube or are you just on StreamYard?
Both. I just typed into the YouTube channel, so I guess you can type there. Yeah, it's streaming live on YouTube and StreamYard.
Gotcha.
Some people are shy. And they want to remain anonymous. That's fine. All right. Let's start looking at some of the well, let's look at Bitcoin first. A quick second. Or you know what? I'm going to pull up IBIT. I've been looking at IBIT lately. It's a proxy for Bitcoin. We put a trade on in the Discord on Friday. We sold the cash secured put. Don't recall the strike.
I think it was 62 or
what's that?
I know you did a 61.59 put credit spread, and then I think maybe a 62 cash secured put.
Let me see. I'm gonna have to look quick. I did a 61.59 put credit spread. Thanks, I forgot about that one. And we did a 61 cash secured put. You were spot on. Yeah, thank you. So we sold below the 200-day moving average. I'm sorry, below the 50-day moving average, and below the lower Bollinger Band. So we have a put credit spread, and we have a cash secured put we sold. Let me put it on the chart. So 61 is right about here. So we sold right about here, let's say. That's where we sold the credit spread and the cash secured put. And I feel comfortable with that. I mean, I like that trade. I mean, I don't think Bitcoin's about to fall out of the sky, but I do think that it's also technically looking to pull back a little bit. I mean, it needs a little bit of a healthy pullback. It closed the gap. Again, 90+% of gaps get filled. And as we can see, it broke horizontal support from this down day here, and it closed the gap. So mission accomplished. That might be all it was intending to do. And when I talk about it like it's a person, or that it's like it's an entity, but the market has a way of, acting like an entity. It is an entity. It acts like an animal, and it will do what it does, and it likes to fill gaps for sure. And that's
the technicals just doing the work and just believing in the technicals.
Yep. Now let's look at some technicals here. Let's pull up from the gap. Well, not gap down. This was gap down. This was a gap down. Okay, gap down, touched the 50-day moving average, and closed green on the day. And since then, it's been in a nice uptrend. Let's just take a peek from the bottom of the bottom up to the tops, and let's just see where we lie right now, or sit right now, with the Fibonacci's. I'm just waiting for this thing to okay. And what we've got is the pullback right to the 38.2. A little bit. Well, again, this is not like perfect science, but it's real close, and it closed right at about the 38.2 Fibonacci retracement level. Another day of huge volume, but not all that big compared to what it's actually Bitcoin has been, what IBIT has been seeing on a few occasions. So not the end of the world as far as that's concerned. RSI is nowhere near getting baked oversold. It's at 47. That's still healthy. And we did have a move down on the MACD, but nothing terrible. No crosses, no bearish cross. So technically, Bitcoin or the IBIT proxy doing just fine. And so these type of moves like this, I like to sell premium. And so we did. Arthur was saying we did a put credit spread, and we sold a cash secure put. So some of the traders that might not have large accounts, they do spreads. So it uses a lot less buying power, and some of the accounts that have higher buying power, or just they like to do cash secured puts instead of spreads, they did the cash secured put, and we sold down here. So that's a nice distance away from current price, which is at 66. So it's 5 points. So to move down to get to where we sold is about 7.5. Call it 8%. IBIT would have to drop 8% for us to be challenged over here on this particular trade. But technically, just getting to the technicals. This looks technically okay. It did gap down. It did take this support level out. I mean, this low of this day out. But it was mainly, I think, just trying to close this gap. And from here, it can try to build up some sideways action, let the 50-day moving average and the lower Bollinger Band move up, catch it, and then start to give it some support. I mean, I can't see Bitcoin falling out of the sky, because if the market is going to do a pullback, and when I say the market, I mean the Qs and the SPYs and the IWM, money is going to want to go somewhere. Now, it can rotate into other areas of the market. It can go into healthcare. It can go into real estate, home builders. We've been seeing some stocks like some of the home builders have been waking up. And that might be an area that we're going to look at in the Discord this week, maybe doing some type of a positioning on the long side, because some of them have been looking good. This is an ETF on the home builders, BLDR. And I apologize for my computer being so slow, but this program drains a lot of juice, and this website drains a lot of juice. Even though I like it for its ease in charting, it's more nimble than my Thinkorswim when it comes to pulling up quick charts and stuff on the go. So here's the home builders. You know what? Let me see about TradingView. Maybe TradingView is quicker. I don't necessarily need all those other things I look at. We could just look at the technicals. Yeah, so we got the 200-day, and then we got the 50-day moving average. We don't need necessarily the RSI right now. Let's just look at some patterns and what's going on. We've got a nice looking we got a nice uptrend starting out here, and it's starting to accelerate a little bit. Okay, so that's all nice. An ascending triangle coming up, which is beautiful. Okay, so a move above horizontal resistance here would be very bullish for the home builders. And again, this is an ETF. Is it? Hang on. I thought this was an ETF.
I don't think it's an ETF. I don't think it's an ETF.
BLDR. It's not, but there is one for that. Hang on, let me see if I can find it.
I'll tell you what, I've been watching BLDR for the last week or so, and it has been getting some more love, hence those bars that we've seen.
Nail. Yeah, it's Nail. That's the one I was thinking about. Nail. Nail is the home builders 3-time bull. Yeah, so this is nice too. This is what's that?
I do like BLDR. I've researched that one.
Okay. Yeah, I like them. I like a few of them in this area. Look, similar thing going on. You got a bullish looking ascending triangle here. Needs more time. Volume pattern is very nice. Okay, so as technicians, right, we look at a lot of things. We've got a nice looking volume pattern going on here. Okay, we've got some increasing volume as we're starting to see increasing prices, higher lows, and a few higher highs. So this is a confirmed uptrend. Anybody want to say hello from the YouTube channel? I see a couple of more people showing up. I wish I could find out if they're having difficulty posting. Somebody said to me last time, Arthur, that they tried posting and they couldn't. And I don't know what I can do better to make that happen.
I just posted.
You know what? Can you post? You just did. Okay, good. Thanks. Yeah, thanks. Okay, and I did too. So there we go. There's one. Hey, Chainsaw, how you doing? Yeah. So yeah, the home builders are looking good. Some individual stocks, DHI. DH Horton, already actually ahead of the game, ahead of the previous two we looked at. Same nice look, but a little ahead of the game. Wouldn't mind seeing it pull back a little bit. Nice, beautiful ascending triangle. Let it pull back a little bit and go from there. But yeah, real nice looking charts. Another one would be PHM, Pulte, Home Builder, and these guys build. Hey Lou, how are you, man? Great. I'm glad you can make it, Lou. Yeah. These are high end home builders. So they're building the higher end homes across the nation. Not sure where they actually do most of their building, but they definitely build some nice high end homes, and just beautiful looking uptrends right now. Pullbacks are buyable. This one I would want to see come back to the ascending, this diagonal trend line, support trend line. That would be beautiful. Matter of fact, Arthur, what do we got? What do we got trying to form here? What do we got? One of our favorite patterns. What do we got, Arthur?
Go.
Not only are we in a triangle, what do we got?
Oh, that's a cup and handle.
Yeah, we're gonna get maybe a cup and handle over here. A little more sideways action into the apex. Apex is where you get the two trend lines coming to a point. Okay, we're gonna hopefully get a little backfill. Boom. We got to keep our eyes on this one. And if we get a nice pullback into this area of this uptrend line, just sell some cash secured puts, buy some calls, financed by buy some calls financed by that cash secured put. Let's look to get it up into the 130 to 140 range. Definitely, especially on a breakout, and earnings are coming up. We got time, which is nice. We have plenty of time to be able to sell puts, put spreads, put ratio spreads, and get long for a potential move up. Hey, listen, even if it only moves up to 130, 132, that'd be fine.
Yeah.
Lou, if you have any names that you wanted us to look at, stocks companies you want to talk, look at, we'll be happy to. Also, Chainsaw, you too, if you have anything you want to look at. But let's look at some of the. Let's look at Home Depot. Okay, let's take a look at Home Depot. Surprisingly, you would think because the home builders would be the contractors would be buying from Home Depot, you'd think this chart would look better. This doesn't look good at all. This chart looks ugly. This chart, we got a huge head and shoulders top, and we have to me, we talk about these, Arthur, right? We got would be a wedge. It's a triangle. It's a bearish triangle, and most of the times we're going to come like this and come out of this like this. Right there. We're going to move to the downside now.
And you got
I don't know
earnings
where the contract.
Look at earnings is right there, huh?
September
Okay.
September 11th, September 17th. Yeah, we got time. About a month and a half. What I wonder is with the home buyers moving up, why? Maybe so home builders, everything is looking forward 6 months. So probably they're going to be selling houses that are already being built, let's say. Now, houses that are already built, it means that Home Depot and Lowe's already sold their lumber 6 months ago when they started building these houses, probably. So maybe that's when we had these prices up here. And now that there's no more demand because the houses are complete or near complete, that's why Home Depot is kind of drifting and looking lower.
Yeah, that makes total sense. There's too many houses on the market, so they're not building new houses until they get rid of the houses on the market. So that would make sense why Home Depot's just still been a downward trend. I'll tell you what, that's a good thing to know. I mean, I'm in that field, of course, and I know that my contractors aren't building new homes right now because there's too much on the market. So just good knowledge for going in the future for the rest of the life for sure.
Yeah, so for those watching, so Arthur has a little insight into stuff like this because Arthur is in the electrical industry. So, he's talking now from some experience as far as because when they're building new houses, they bring Arthur's phone to come wire them up. So if he's not getting calls to wire up, or he is getting calls to wire up, that means either things are booming or not, or busting, let's say. But this is definitely a bearish look to Lowe's too, which sells the lumber. And there are other places that sell, massive lumber and building products. But I believe these would be the biggest two.
Yes,
the biggest
these
two
are your
across
two
the
biggest
nation.
box stores.
Yeah. So when work's getting done, hurricanes, tornadoes, all kind of damage being done, and then you rebuild companies like Home Depot, Lowe's, and even what was that company we talked about the other day? You wanted to get for the Generac generators.
Yeah, look at that chart. Just look at this chart.
GNRC, right? Yeah, Generac.
Yep.
So Generac makes generators.
Jesus.
Arthur and I did a coaching session.
Jesus.
Arthur's one of my coaching clients, and we were talking about it over here. And Arthur's like, I like this stock. And then sure enough, we had I think the tsunami over in near Japan.
Yep.
I guess there was anticipation of a lot of damage, and boom, the stock shot up from 155 to 195, 30 points.
We missed that one so bad.
We missed it, but we talked about it, and that's the most important thing. We're getting good ideas. We got to act on them. So now we got to act on the home builders because we don't want to miss that. But yeah, I mean that's what it takes. All it takes is sometimes a nasty world event. Tsunami.
It was the Texas. It was the Texas flooding that was happening, and I was like, man, this is national disaster season, and something's about to happen, and then the tsunami, and then Generac just went. That was but you're learning the seasons, and I think history does repeat itself to a certain extent. This probably won't happen next year where Generac's just going to spike, but in the next couple of years, who knows?
Right. And it hasn't done it in a long time. I know there's been past occurrences. I know this stock from years ago. Whenever there was a hurricane announced, it used to rip and roar. And it was at one time.
Yeah, I mean, look at it.
Yeah. So zooming out. But yeah, let's get back to talking about some of the important stocks that really make a difference with the QQQ, the SPY, because this is what's going on right now. Is the market going to rebound? It's going to need Microsoft to stay strong. Now, Microsoft had an ugly day on Friday. It had a monstrous, unbelievable, unbelievable, like as far as even percentage terms for a $500 stock to go up like it did Thursday on earnings. It gave it all back, not all of it, just a little bit to go, but it gave most of it back, and it's one of the bigger components of both the Qs and the SPY. So we're going to need Microsoft to stay strong and at least hold up from this area that it built some support in right here. Meta, another one that's the big thing with Meta is it's not just Facebook like it used to be, right? It used to be Facebook, then Snapchat, and now it's generating all these revenues for the AI chips, which is fueling NVIDIA, AMD, AVGO, all these other companies. So Meta is now, if they stop buying and spending as much money as they are on AI, that's going to traumatize some of these chip names. So Meta has to keep spending and keep up, their buying pressure on chips. So Meta has to stay healthy. It's definitely holding up above some areas that it couldn't get through, and now it did. So this area would probably wind up being support. If it breaks it, it's gonna now probably want to test the rising 50-day moving average, which is these yellow dots. So as it comes down, test that support trend line. If it doesn't hold, it's probably going to come down, test the 50-day, and then try to have to get back above. And that's going to be a task because once it breaks it, if it's got to hold for it to really become major support now. If it breaks it, it's going to be considered weak. So we want to see it hold if it can on Meta. And we already saw Apple. Let's pull it up again. Apple was, definitely a stock. It was a beast at one point in its life, and it's turned out to be now kind of a dud. They're not really coming out with a lot of products that are making the Apple cult happy. And I don't mean that disparagingly. Apple has their followers, and and haters, right? But they're not really making their followers and long time supporters happy. Major topping area here, which it's going to be hard, almost impossible to get through without something big coming out of Apple. I mean, it's going to take some type of maybe a new product or a new twist on something. I mean, what's that?
They're in talks to buying someone out to like take them to the next level. And I mean, look, Apple, I mean, me personally, I'm an Apple guy through and through. And I think, they're definitely, stagnant, but they're a sleeping giant that they're going to get some buys and they're going to do some things. And I think they'll still be there. I mean, how many human beings have an Apple iPhone,
Definitely. Yeah, I know what that would be, maybe a catalyst for them that could be the catalyst that would help them rejuvenate their stock price. Buy an AI company. Well, actually, they see, that's the thing. Apple loves doing everything themselves. They love doing everything themselves. So, they're probably not going to want to buy out a big name AI company. They might buy out some type of small company that helps them on their bottom line.
I read somewhere potentially Snapchat.
I don't know anything about it. I thought Snapchat was owned by Meta. I thought that was a Meta product. I could be wrong.
No, it's not.
No? Okay.
No, there's some talks there. Everybody's guessing, but supposedly Apple's going to make some big acquisition in the next couple months, and it's going to put them right on the map, and it's going to give them that tick that they need. And who knows if that happens? That's just the word that I'm hearing.
Okay, I thought it was under the umbrella of what? So Meta owns one of these chats. Which one is it?
It's Instagram, huh?
Definitely Instagram.
Yeah, Facebook and Instagram, and I thought that's what Meta had.
There's something else, but I can't put my
WhatsApp. The WhatsApp.
WhatsApp. That's what it is. That must be WhatsApp. Yeah, okay.
It's the WhatsApp.
So Snap. Yeah, maybe I kind of heard. I thought I heard that too, that they were looking at Snap, and I don't know why they would do that. But fine.
And then you saw all those crazy calls come in on Snapchat.
Yeah, we have been seeing calls come in on Snapchat. I was almost about to buy some, but we didn't. I don't know why I didn't, but yeah. Did you get some?
No, I did a put credit spread.
Okay, that's even better. Because that has a better chance, a higher probability of winning for sure. Hey, Hakan, how you doing, man? It's WhatsApp.
He told us WhatsApp. Thank you, brother. Yeah,
thanks, Hakan. By the way, anybody that's in the audience that has a chart or a company they'd like to take a look at here, we'll be happy to pull it up. And for anybody that just showed up, I just want to introduce what's going on. So I have Arthur. Arthur is one of my trained technician traders in my group. I'm Uzi. I run mainly a premium selling Discord where we mainly sell premium, and that means we sell cash secured puts, we sell anything to do with spreads, and we predominantly take in premium, and we're sellers of options. That's the higher probability trade, and that's how you can stay in this business. We do some longs every now and then on some unusual options activity. It has to be really good, and we usually try to finance that with selling premium to pay for that. Not all the time, but most of the time, so that it's a free trade or a very, very small cost. But if something is just too good to let go and try to sell anything to finance it, we'll just buy the calls and get into it. But we never risk too much. We're never ever putting in anything huge. We're just looking for quick 50 to 100%. Sometimes we get 300-400%, depends. But we're predominantly premium sellers. And for anyone showing up tonight that would like to come by and hang out with us for a couple of days next week and trade, you're more than welcome to. Just send me send me your information, and we'll bring you in for a couple of days. But that's how I met Arthur, and Arthur has turned out to be a great trader, and he's a great technician. And this is what we do. We strategize, we idea storm, and we look at charts, because charts really tell you the future of what could come based on technical analysis. Now, there are a lot of people out there who don't believe in it, and I don't know what they use then to guide their trading, right? What do they use? Their gut? How they feel, or what someone else is buying? I don't know what else. If you don't use technical analysis, what do you use? But I love it.
Financial advisor.
financial advisors, maybe the taxi guy. I don't know. I'm just trying to be funny. I don't know if you don't use something that you can try to replicate over and over. What do you use? I mean, gut feeling. Maybe just because you buy there, and that's fine too. If you want to invest in a company that you buy their products all the time, maybe it's Starbucks, maybe it's Home Depot, maybe it's a company you buy their products all the time. Maybe your wife buys stuff from Elf, beauty products. You want to buy stock in Elf, that's great. But we're traders. We don't really try to marry positions. We want to get in and get out, make money, and move on to the next one. Those of us that have wives, right? We marry the wife, but we don't marry our stocks or our trades. We try to get in, make profits, and get out, and to move on to the next trade. There's always another trade to come around. Let's look at the video. We haven't looked at that one yet.
We try to stay emotionless.
What's that?
We try to stay emotionless. We're not attached to anything.
This is true. Now, we did have NVIDIA do a reverse, no, not a reverse split. We had NVIDIA split. So these prices are after split. But if it didn't split when it hit 180 this past week, this would have been times 10, $1,800 for NVIDIA. Jeez. So this stock has gotten crazy. Okay, crazy move from the April lows. Is it shift?
I had bought before the split.
So this is 108, call it 109% move up from the April lows. That's just ridiculous, right? For a billion-dollar company. A billion-dollar company doubling. It's actually more than $1 billion at this point, but it's a multi-billion-dollar company doubling in since April lows, which is, come on, that's just, that's the bubble that we're trading in. So I'm not trying to say that the market's dead and it's going to die, but this is a bubble. We're in a tech bubble. It's a chip bubble. It's fine. It can keep going, but when it bursts, like all bubbles burst, we're going to have a pullback, and sometimes it could get ugly and you get, down to that 200-day moving average. Stocks getting down to so look, when they had, this is their previous all-time high when it split and it came back down after so, and it broke the 200-day moving average with a vengeance, and it looked like it was going to hell until it didn't, until it turned around, and then it looks like it's going to, heaven. And it's not going to go to hell, and it's not going to go to heaven. It's going to pull back, and it's going to find a healthy trading range, probably down to the 50-day, and at some point the 200 again in the future. But we do have rising moving averages, so it's not going to come all the way down to 130 necessarily, but it's going to come down to somewhere in the middle, or whatever you want to call it is a healthy pullback. They say 10 to 15% is a healthy pullback in a bull market. If we take this area here quick and just do a quick Fibonacci, where are some of the key pullback levels? 61.8 is a key level. That's about 150 a share. Okay. And that's somewhere in the middle between the 50-day moving average and the 200-day. So that would still be considered bullish. Pulling all the way back down here, about the 149, 150 level is still bullish. Okay. And that could happen over the course of the next, 3 to 6 months. It would still be fine. AMD, which again, we're waiting for earnings coming up on what day? It looks like it's August 5th. Yeah, Tuesday, August 5th. So come Tuesday, we've got, and let me just clear all this. This is some previous charting I did.
I think they're going to smash earnings.
Yeah, so this one also has been on a mission since bottoming out in April. Yeah, and again, once it cleared the moving averages, that's why moving averages, and the moving averages are considered technical terms. So if you look at moving averages, you're somewhat of a technician, but that's fine. Once it broke that 50-day moving average, pulled back, and then broke the 200, it was game on. To it's not at all-time highs, but it's challenging the previous swing high all the way over here from July of 2024. So a year ago, it's challenging that area now, and pulling back as we come into earnings on Tuesday. We just had a golden cross, I guess about 3 weeks ago. So about 3 weeks ago, we had the golden cross right here. All right, so that's, but again, if you bought on that day, you're good, but you had to sit in this pullback. So it pulled back from 162 to about 150. That's 12 points. Who would have held that? I don't know. And then it ripped back up. So a lot of times the 50-day crossing the 200 is kind of late to the party. That's why the shorter moving averages are better if you want to try to time moves. But what you can use this for is getting it on pullback. So let's just say you saw the cross and you saw it at this level and you said, all right, I'll get in on a pullback, being that now I have the 50 crossing the 200. If you got in here, you were the smartest guy trading that day. So yeah, that's nice. But yeah, AMD reports Tuesday. All eyes are on it. And yeah, a lot of people are thinking they're going to blow out numbers. I mean, just like Hood, it did the same thing. It ran until earnings, and they did have great earnings, but the market priced it in already.
Yeah, I think like you said before, the market priced in like all the run up, and I think that if you look at AMD, even if they do crush earnings, they might not go up anymore.
Correct. Now, what happened to Hood is, what's typical of something that's been running up, blowing out numbers, and you have to ask yourself, if on great news they beat earnings, they beat on revenues, they beat on earnings per share. If that wasn't enough to make it run to new highs, what's it going to take? Well, right now the news flow is going to dry up for Hood. Yes, they could have some news events that come out in the next few days, weeks, or months. But what could be the next catalyst to send Hood, ripping higher? Well, yeah, that's a good point. Getting added to the S&P.
That's what they said in September, that it might be their time to shine, but they've been saying that.
Correct. It's been talked about. They've been getting pushed aside by different companies, but could it? Sure, that could be what makes it rip up. But if not, and until that news comes out, it's a broken trend. It broke down the uptrend on this day here. It even broke some support levels here. It did hold this one. So Hood did hold, this area right here on Friday. That's going to be big. The question is, does it do a little bit of carving out? Because it's not a double top, but it would be more of a head and shoulders if it does something like this, and then starts to come down to the 50-day moving average over here. And if it breaks that, okay, then we're going to head most likely, to the $75 range as the 200-day moving average kind of comes up toward it. So Hood is in a tight situation for the longs, just because it broke trend. It definitely broke trend. And I've been saying it for a while now that it's definitely it's a cult stock, and there's nothing wrong with it going higher and higher. But with the news that was supposed to come out and make it go higher, it doesn't bring it higher. You have to be careful if you're long, and if you're short, then great. That's how I feel on Hood. SoFi is another one that it had good earnings. It's been going up nicely, but it had a weird response to its earnings. It had, not only did it have a gap up on earnings, but I believe they had news come out, I think, the next day, Arthur. I'm not sure.
Dilution. I think
news came out the next day. They did, right? They had a dilution. They came out they added shares into the float, brought it down. Forget what happened the next day, another gap up, but creating these what's called wicks. These are what are called areas where the stock tried to get up above, couldn't, and failed. And when that happens, it creates this white halo above, if you want to call it that, which it's this skinny little wick here, which means that the buyers, the bulls failed. and the bears won on that day, meaning that even though it closed green, it should have closed all the way up here because there were enough buyers to push it up to that level at one point. But at the end of the day, they couldn't hold it up. So it closes all the way down here, leaving all these longs trapped. So that's overhead resistance. The second day did the same thing, but it couldn't make it all the way up to the previous high. That's showing weakness, and it closes below the midline of the prior day. So this is bearish looking. And we had the following day, which was Friday, show its face to be red. So I hate to say it, but this is another one of these
I think I could go to
followed stocks that it's looking like it's gonna kind of go sideways because everything is drying up on the buy side, and probably
I think 18. I think 18 is the more realistic number for SoFi to begin with.
Yeah, I mean that seems to be more. I don't know the fundamentals on the company. I know they are profitable, and I know that they're looking to do not what Robinhood is doing, but they're trying to spread their wings like a Robinhood in a sense. They want to expand and bring in more revenue and going into different areas. I don't know how they're going to do it, but I'm sure someone that may be watching knows a little bit more about the fundamentals than I do. But you wouldn't be wrong, Arthur. That would line up is probably exactly with the 50-day moving average, right around 18. So that would be probably a good buy. If some of you are out there listening and you're looking to get long SoFi on a pullback, that would be a great zone to get in. Let's do a quick fib pullback on that, and let's just see where that lines up, because we just talked about 18, and let's use this area here because
even if you go back in time, 18 seems like it was a number that it's touched before and kind of stayed at. But where is that fall?
Yep. So now, if we look at some of the fib levels, this would be the so that's where I started. So that would be almost a 100% pullback from the swing low of here. If we start it down at all the way down here, where it kind of starts its from its major move up, 18 then lines up pretty much exactly with the 61.8. So on a Fibonacci level, that would be considered still a bullish buy zone. So like we just said, 18 wouldn't be a bad area, and it lines up with the 50-day moving average. So there you go. You got two check-offs, two reasons to get into this stock. And that's what technical analysis does. It tries to help you get in or stay out of a stock. And if you live and die by certain levels, like the 61.8 for entries and exits, let's say, or entries, I should say, and exits on trend line breaks, then technically you can do well. That's SoFi. Well, HIMS is another one. Now, what's crazy is I saw HIMS when it was like $6 or $7, and someone I know is saying that he knows someone who said, keep your eyes on this stock. This is going to be huge. And you hear that a million times in your life. Watch this stock. It's going to be the next this or the next that. But I didn't get involved like I should have back here when it was actually over here when it was in this $6 range. So we're talking back in 2023, 2022. That's when I first heard about it. And some of these concepts, they do catch on, and this is a good one because men's health, and they even do women's health now, but they do mail order stuff where you don't have to go and see a doctor. And some people get embarrassed if they're talking about male, issues with, sex drive and just well-being. A lot of men don't want to go to the doctor. So from home, you can go and do everything online. Medicine shows up at your mail, and you're good. So this is a great business idea. And they also now service women. So, they've got a lot to look forward to. They did. This was dilution here, Arthur, right?
No, I think that was the Novo. That was the Novo lawsuit or something,
yes,
or the partnership.
Yeah, correct. You nailed it. Yep. So they were doing business with a company called Novo. I'll pull it up. NVO is the symbol. Novo Nordisk. Okay, they were doing business with them. This is a medical company. And one day Novo didn't like, I believe, some of the claims they were making, that HIMS was making. So they pulled the contract, and overnight, HIMS looked like it had an earnings gap down. It looked like bad news came out with their earnings. It had nothing to do with earnings. This was just that the company NVO pulled the contract and they were supposed to lose a lot of business from that, and they might, but it looks like it didn't really matter. So when you see something like that, yeah, negative news that now doesn't make a difference to the stock price, this thing is probably going to go higher. They do have earnings coming up, though. They have earnings coming up on August 4th. So we'll find out. We'll find out what the forward. Matter of fact, that's Monday. We'll find out what the forward-looking.
I feel like even if it kind of flutters around this price at $60, I'm fine with that if I'm a holder of HIMS, you know.
Yeah. I mean, the 60 level, not bad. Even if it drops down, because now it's got some more trading history to show its face. So even anywhere along this trend line would be a decent area to get in.
Mm-hmm.
In my opinion, this is a strong trend line. It's touched it a number of times. We've got support heading in this direction, and it's a nice angle. So you have all different. You have all different. That's that degree of angle. I mean, let's take a look at Nvidia's. Look at Nvidia's angle. This is an unsustainable angle. Okay, a plane can't fly like that forever, right? No. But a plane can kind of fly like this a lot longer. I mean, it's definitely a less steep of an angle, okay, and it's sustainable, much more sustainable.
You want to check out Palantir again?
Yeah, any pullbacks to this would be perfect, and it also has a one of my favorite ascending triangle pattern.
Yeah.
So pullback would be nice to the trend line. We're not going to get it though. Tuesday or Monday, earnings on Monday. It's either going to break the heck out, or it's going to potentially, fall. The question will be: does it get held up by diagonal support? And
that
we'll see.
I think, if I'm not mistaken, HIMS doesn't have a lot of calls on their tickets right now. Even I don't know. I have to go back and look at that. Earnings might just shoot that thing up a little bit more. I don't know. Now I got to really look into HIMS.
We'll see. I mean, they also have a what's the word for him? Not flamboyant. He's a very colorful CEO. Some of these companies that have these colorful CEOs that like to, they love public speaking, and they love talking about their company. There's some CEOs who don't like to talk much in front of to the public. And they sound like they're, Debbie Downers on their conference calls. But you have other guys, like the guy that runs NVIDIA, the guy that runs SoFi, the guy that runs Hood. They're kind of like flamboyant, and they love the camera, and they love to talk. So they do whatever they can do to juice up their price. So I don't see him as CEO coming out and talking anything negative. It's going to be all be positive. Question is going to be, is it positive enough to get the stock an erection and get ripping up, get going higher?
Yeah, is it gonna hit new highs here, or is it just gonna? Yeah, I'm gonna do some more due diligence and see how this earning report's gonna come out.
Yeah. Now, one indicator of the overall health of the market, which used to be, was Costco. Now, Costco used to be the company that everybody went to for their their weekend shopping, right? Because you buy in bulk, you save money. Costco and BJ's, but look what's going on with Costco. So the consumer must not be spending what they used to spend at Costco. I mean, we did a trade on Costco. We had a killer trade on Costco. Some of the guys milked it for more than I did, but we put a short on this thing after a coaching session that Arthur and I did. We identified it over here as being very weak, and we put a bearish trade on, and we made money all along this move down here. Not all along, I should say. I got out right around here, and it kept going, bounced on Thursday and Friday. So isn't that odd? The market falls like heck on Thursday and Friday, and Costco bounces. So it's definitely counter. It's not moving with the market. It's moving in contrast to the market right now. That's a little odd, but it is what it is. But anyway, Costco used to be, the stalwart. That was a stock that you could kind of like feel safe in as it went from $500-600 all the way up to $1,000. It was good to go. Every pullback was buyable, and now every pullback to upward is sellable. But Another big name that's another cult stock is Palantir. Like Arthur said, Palantir is a company that they've got a lot of government contracts, and it's made a
But
huge
look at
move.
that
I mean,
angle. Look at that angle, though. That angle is
this stock was
definitely.
$20. Yeah, a year ago it was $20. A year ago this stock was $20. It's now 160. Well, it was 160. I mean, 800%. So that's 800% move up. But it's very overly priced. In my opinion, and a lot of people's opinion, the question is how long will it stay overbought and overpriced, right? It's overbought on the chart, and it's overpriced on what they earn as far as their PE ratio and fundamentals, from what I understand. So can it sustain it? I don't know. The chart looks compelling for a short, though. You've got what's called a rising wedge. These don't usually end well, as far as for the medium term. Once it breaks trend, like it just did on Friday, it doesn't usually end well. And what I mean by that now, it's really got not much holding it up until it gets maybe down to here around 140, and then it's got the 50-day moving average. So this one, and it looks like it could be carving out, this being a shoulder right here.
So you got earnings Monday, and they might. I mean, the earnings could just drop them down and bring them back to reality a little bit.
Yeah. Well, we've got a little bit of a short. When I say short, just about a 4 or 5 day shoulder, about 5 or 6 day head, and maybe you get another 3 or 4 day. Actually, wait, we got earnings coming up on Monday. So Monday.
Yeah.
Monday, it's either going to shoot.
You got Hims and Palantir Monday.
Yeah, big day Monday for Hims and Palantir. To me, it looks bearish, no matter what the earnings might be. And
the earnings aren't going to be. I don't think the earnings are going to help them because they don't make enough money for what they're valued at. So I don't understand how earnings could help.
Yeah, and it just recently got a couple of good contracts from what I remember reading about, and depending on what the administration is planning on spending for what they make in defense related products, we may have already set aside and labeled the funds in the what do they call that, in the government spending packages for all they're going to spend this fiscal year on, let's say, defense. And if that's the case, there's no reason for this stock to stay as high as it is. It's probably going to do a pullback. Again, not terrible if it comes to the 50-day, but painful for the ones, the people that bought it anywhere from 150 and above, thinking it's going to just keep going up to maybe 170, 180, 190. But it's been on a tear. So the point being, it's gone from 20 all the way up to like 125. Then it pulled back. People couldn't wait to get in, and they did. And then it rode it up to 160. Probably going to do a pullback, even if it has good earnings.
I mean, a lot of people are waiting on this thing to pull back, though, and it just hasn't pulled back. I'll be honest. I bought at 27. I sold in December, unfortunately. And literally, when I bought at 27, I was like, I'm going to wait for the pullback to buy again. And then no pullback ever happened. And then the April 7th thing happened, and I wasn't prepared for that moment anyways. So, but yeah, I mean, everyone wants every trader out there wants this to go down, and it still won't go down.
Yeah, I mean that's actually an interesting point too, though, because if everyone is saying it should go down and then it doesn't, then it's you really should get long. When the price defies where everyone is leaning, then they're on the wrong side for sure. Thanks for sharing that, Hakan. I hope I'm saying your name right. Yeah, thanks for that. So it's 16.9% move, and that makes sense because Hims is in a very delicate place. It's trying to figure out can it stay making as much profits as it once was before the Novus NVO contract failed. Where are they going to replace that demand from going forward? And it's expected to produce decent earnings. So 16.8, I believe that's a big move.
That'll be about to 80.
Is that right? Okay. Yeah, I mean,
Well, I mean, it depends on
on
where.
the upside, and then to the downside, who knows?
45.
Well,
I
so
think the
if we just use
44 number, I feel was like a resistance, or I mean, support for him. So I don't know. Like I feel like if it got to 44 was a buy for me. If him's got to $44, whereas
we got a little bit of a cluster area over here, a little bit higher than that. Yeah, a little bit higher, not much. About 46 to 49, 46 to 50. But 44 would be a great buy, definitely. Yeah, it's got a 44 point right down here on this wick.
Yeah,
a little bit of a
that's
higher
kind of
there.
That's my mark. If it hits that, I'm buying more.
Yeah, it'll be interesting to see for sure. So we did AMD, we did NVIDIA. I mean, some of the other chips did get hurt. I mean, Marvell got hurt on their earnings.
ARM got destroyed. Qualcomm. There's a couple of them that got destroyed. ARM got really destroyed.
This, even though this did get hit, it didn't break. It didn't break the trend line. Boom, right to it. Isn't that? See, that's what the people that don't believe in trend lines. You got to start believing. I mean, you can't make this stuff up. Boom, right to the trend line. And then Qualcomm got hurt. This one broke. This one broke some trend line support.
Oh yeah.
It definitely broke horizontal support. It broke support there. It broke horizontal support right here. And look how weak it was on Friday. It tried mustering up the energy to get even halfway or even through the support. The trend line couldn't get it. It's below the 50, the 200. It's below all the major moving averages.
That's going down.
And yeah, this one's going to head lower. But that's what I'm saying. Down. Some of the chips, was that ARM?
Yeah.
Yeah, ARM
I think it should stabilize here. ARM should stabilize right here. It better stabilize right here.
Well, it's amazing, right? Not amazing, but hey, look, 200-day moving average caught it. If it doesn't hold it,
I know.
It's definitely
I got it. This is one of those I got long in, and I'm kicking myself in the ass.
But we've got a support zone that was broken on Friday, and it's got to get above it quickly. The longer it stays below, the more the bears are going to take over, and the bulls are going to be, shitting, because it's got to get back above that quickly. The longer that something stays below a broken trend line, the worse it is for the longs. If you're talking about a trend line break.
What's the next? What would be the next?
For the shorts. What's that, Arthur?
What would be the next support after the 200?
Well, we've got to look toward the next cluster and the next area where it had anything that remotely looked like support, which would be right around here. So anywhere from about 118 to 125.
Gotcha.
And it's got a gap, so it looks like if it stays weak, it could head toward that gap. And even though it's a small gap, it's a gap, and 90% of the gaps get filled. So that might be on its what its mission is about to try to accomplish.
Yeah, I think I'm gonna hedge it.
Any charts from anybody in the audience that we want to take a look at? Trying to think. We did AMD, we did NVIDIA, we did Meta, Microsoft, Apple, Netflix. We did a trade on Netflix for earnings, I believe. Yeah, we won on that. We did well on that. We've won on every one of our earnings trades. By the way, anyone in the audience, we sell premium, we trade unusual options activity, and we trade earnings, but we don't gamble on earnings. There are some people that trade earnings and they pick a direction, and they place a bet, and that's fine, right? If you want to place a bet, like you betting on a game or betting on a horse or betting on whatever, that's fine. But we don't play earnings like that. We play earnings from the neutral side. So we don't care really what the price does in reaction to the earnings. We just want to sell premium and take in either one side or both sides, meaning either call side or put side, and sell to the people that are on the gambler side. So they're buying calls or they're buying puts, and we're selling them to them, and we're taking a position that's neutral. And this last earnings season from January to June, we had about 60 trades, all winners. And this year so far, since the new earnings season started, we've maybe taken 10 and all winners. Some of them 100% winners. When I say 100%, we kept 100% of what we sold. So if we sold something for $50 or $80 or $120, we keep it all. Or that's 100% winner. Or we keep a portion of that. That's what we do. But if you're interested in trading earnings with us, again, that's part of what we do, and we don't gamble. We definitely, Arthur, right? We don't gamble.
No, definitely. I mean, you are definitely a sniper. I mean, you don't get into anything unless it passes all your criteria. And yeah, I mean, there's no gambling. It's all technical indicators and, proven methods that you've spent 30 plus years mastering. So it's not like any person on the planet can mimic what you're doing.
Yeah, and like I said, it's all technical, right? It's technical. We're not picking a side. We're not trying to say we think this is going to go up or down. We don't care what it does. We just don't want it to penetrate or challenge the position that we put on, which is usually a sell position. And again, we'll have winners, all winners. So if you're interested in that, just let me know, and you can come check it out. And there'll be some earnings trades this upcoming week for sure. And
he asked about end phase, about the falling knife.
That's another thing we don't do is try to catch falling knives. We happen to be in end phase. So how we handle, difficult or challenged trades, if you want to call them, is the way that option trading allows you to, and that is using rolling. So we can either roll or take assignment and begin selling covered calls on something like this. We're right now in the roll stage. So we did a trade which was challenged, is still being challenged. But like anything, you can't go up forever and you can't go down forever. This is 1, 2, 3, 4, 5, 6, 7 days down. Okay, the odds of it continuing to keep going down are very rare. So let's just say you had a coin and you're at your house and you flipped a quarter and you got 7 tails in a row. Would you really think you're going to get another tail? Probably not. And I'm not trying to say this is like flipping a coin, but it's all about the odds, right? So 7 days down, the odds are very strong that it's going to experience what's called a counter trend move. A couple of days of retracing. Even if it wants to keep going down, it's going to, let's say, bounce or do a counter trend move somewhere toward the most recent area where it spent some time trading, which would be around here, 37, 36, which would be a new area that maybe some sellers, and which are shorts, would want to get back in. Okay, but for someone like looking to get into something like this, if you don't mind being wrong, meaning getting in and it still goes down against you, then yeah, go ahead. I mean, you could nibble here because the odds are high that it's going to bounce. Now, when you say how about the falling knife, do you want to put on a swing trade, or do you want to invest in this for the next year? It really depends on what your motive is for getting in. I know people who scalp trade. They've probably been in this thing 1,000 times, in and out, in and out, in and out, because as it's moving down all day in these days, there have been, let's say, moments. If we look at a 5-minute chart, let's just look at a 5-minute chart. Maybe I just show you what I'm talking about. On a 5-minute chart, it's made bounces along the way where if someone is a day trader, someone could it bounced from here, $33, it bounced up to $34.30. So someone could make a lot of money right there. So depending on what you're looking to do, will really dictate what kind of trade, is possible by saying a falling knife. If you're looking to buy this thing and average in, if it keeps going lower, then yeah, this might not be a bad place to get some. But the strategy of catching falling knives is definitely not one that will produce long-term
Unfortunately,
profits.
they're exciting. People are doing it right now with UNH.
Exactly. That's what I wanted to talk about. Good point, Arthur. UNH is wrecking lives right now. And I mean that literally. I know some people that have been posting on Twitter who have
Yeah.
full ported this thing. And I say full
100%.
port, that's short term for full portfolio. They've put everything they got in it because why? They believe, and let me just say, I did some charting on this a while back. Look at this. This is horror. This is horror. People are putting all their money into this because they feel it's a ubiquitous name. It's a name that everybody knows. It's a name that they may have their own health coverage from. It's a name that you might think we can't go out of business. But who knows if they start getting multiple lawsuits from families? Who knows? You never know. But this chart is wrecking lives right now because people that full ported here at 350, 360, 400, it's down almost 2/3, 75% or more. So be careful with falling knives. And now, but get back to your question, Hakan. Really, it depends on what you're looking for. If you're looking for a quick bounce on the daily, then yeah, this is not a bad idea. Catch it here and then maybe get out at $35 a share. And if you're looking for long term, then definitely you can get some here. And if it goes down, get a little bit more. Goes down a little bit more. Dollar cost average, and it'll do what's called reversion to the mean, which means at some point it will have bottomed out and it will start to now try to rally, maybe get back up to the 35 to 40 range. Yeah, okay. That's what we're doing. Cash secured put roll down. Yeah, you can start to sell. If you're not already selling cash secured puts, you can, let's say. And if you're in a cash secured put that's underwater, just keep rolling it out. Try to take in credit. If you can't take in credit, just try to pay a debit that's less than the credits that you've been taking in. It's like if you've been taking in $20, $30 on rolls, and then you have to pay $10, $20 for a roll, you're still ahead of the game. The name of the game with rolling and defending a challenge trade is to stay in the game. Don't get so far away from the roll price if you can, so that it's really underwater. Right. So if you can, yeah. So if you sold, let's say, a 35 cash secured put, you can take assignment if you want, and then sell a 30 cash secured put or 25. And then if you get assigned on that, now you're dollar cost averaging on the shares. But because you're selling premium to get into that stock, as you know, probably because you sound like you're experienced, you're taking in premium, which is lowering your cost basis on the shares already. So you're not paying full price. You're getting a discount for the shares.
Hey, Uzi.
What's up?
I gotta go do dinner with the baby. They're waiting on me, so I'm gonna cut it short. And then, real talk, if anyone, y'all are on the fence about joining this community, it is definitely the edge. I'm living proof that it works, and all you have to do is show up and put in the work, and you won't get a better person for a Discord. He'll put his blood, sweat, and tears and make sure we make money. So thanks for everyone in y'all's time. And Uzi, thanks for having me on, brother. And holler at me later.
My pleasure. Thanks for showing up and joining in and sharing your knowledge, Arthur. For sure, man. Let me tell you, Arthur is one of the smartest guys I've ever seen come so far so fast in trading. He's a prodigy. He does a lot of coaching sessions with me, and he's like a sponge. Like, he's so far ahead of the game in just 3 months that he's been in coaching that he's killing it. So yeah, thank you for all those kind words, Arthur, for sure, man. I mean, you're living proof. You're right. When you put your hard work in like you do, you're up later than I'm up, and I'm up late. And you got a family and a baby. So you're doing alpha work.
Well, I appreciate it. And look, I mean, I got the right coach for it. So I'll holler at you, brother.
Thanks, man. Have a good night. I'll see you on Monday morning.
Definitely. Later, guys.
Okay, pal. Have a good night. Okay, for those that are still out there, any charts that you would like to look at before I call it a night myself? It's been 2 hours, almost 2 hours. I appreciate your time. I hope this has been, fun, educational, valuable to you. It's not all the time that you can really hang out and chit chat and look at charts and stuff. And guys, for those that don't know me, maybe some of you out there on YouTube right now know me, but if you don't, I'm trading 27 years full time. I'm in this business a long time. I may look like a spring chicken. I'm not. I've been in this a long time, and I've seen all the different, disasters in the market, from 9/11 to the bubble in 2000 bursting, the financial crisis, the housing crisis, all the different bear markets, the COVID, flash crash, everything. So there's nothing the market can throw at me that really is going to, put me out of business. Thank God, knock on wood. The name of the game, though, is staying alive, and that means not taking too much risk, being predominantly a premium seller. If you're going to take not gambles, but if you're going to take directional trades like we do with our unusual options activity trades, you want to go small size, get in, get out. That's what we do. We do very, very low risk, high reward trades. So if we spend, let's just call it $50, $100 on a trade, we're looking to make double our money. And for the ones that we've been closing, because we did close a number of them recently for great, great profits. And then we're in a couple now where we're waiting for them to move. But with this market turning on the dime like it did Friday, they're going to be challenged a little bit. But again, time, when you have options, that's what you try to buy farther out in time to help you with, giving your trades a chance to work. I put a link in the chat if anyone would like to get set up, trading with us, just to join right up. But if you want to just come by and give a trial, let me know. You can DM me here in the comment. You can put a comment in the YouTube comments after the video is done, or even now, and I'll send you a link. You can come and hang out with us for maybe a week next week, trade with us, maybe make some money, and see if it's something that you might like. All right, with that, this is Uzi. Thanks for your time tonight, everybody. It's been fun. I hope it was, like I said, I hope it was educational. I always get something out of it just by talking about the markets, because when you talk about it, you reinforce what you already know, and you kind of relearn things. And it's nice. It's nice, showing how things work to some newbies and to even some experienced guys. I know experienced guys that show up and they sometimes learn stuff. So with that, have a great rest of your weekends. I will see anyone out there who knows me on Twitter. I'll see you guys soon. I'll be posting some tweets. And thanks for showing up, like I said. And if you want to come by, check us out, you can find me on Twitter or that link. All right, everybody, have a good night. Lou, have a good night if you're still watching. Thanks for showing up. Appreciate you, brother. And hope all is well on your end. And I will talk to you all soon. Take care, everybody.